what is the process of raising finance and getting people involved? And likewise, what is it that you actually look for in terms of, in companies to invest in?
Yeah, fine. So I guess what's the process? This can be done lots of ways. You can approach people like me directly, and you can tell me about your business and what your plans are, and you can see if the stars align, which is probably the most basic variant of what we're talking about. But typically, what people will do and founders will do, and what I'd encourage if you're thinking about this route for your business, is just sit and think, what could you do with more capital in your business? Be it accelerating sales, be it creating a new product, be it some other thing that would drive more shareholder value for you and the partner that you bring in. And once you've kind of formed some basic strands of that, then build a real plan about how you go and execute that, and how much capital you need. And that's the best way to have a really constructive conversation with someone like me and the rest of the industry, because you can present to them effectively your business plan for how you create value together in exchange for the capital that I bring and invest in the business. And private equity venture capital can fund lots of things, from kind of growth, new product development, change in ownership, a buy and build, acquiring other businesses, or some other strategic event. Is so broad. And there's lots of different participants who do slightly different things. So the best place to start is just, what do you want to do? And then the industry and the accountants and the advisors who are out there can help you pull some of that together, but also speak to the right equity house that's a good fit for your plan.
No, cool. It makes sense. Again, like so with the guy I was talking to this morning, they have, he's worked in a sector that he knows very well. They want to go out on their own, launch their own product. But I guess it's difficult that when all you have is the concept, the idea, maybe the design, but you don't have proof of revenue, proof of sales, etc. I guess in that case, I guess there's still potential. If you like the team and you like the idea, you might still invest, but probably not at the same size of stake, that kind of thing.
Yeah, so some of Mercia's funds that are under management will look at investing in a proof of concept. And the idea is there's an investment amount that helps them validate something in that example. So it might be that they build the first production line and they build the first few products and they get a few customers to give them a go. And then what that would then trigger is another round of financing, perhaps from me, perhaps from another one of the earlier stage funds, to then take that to the next level beyond that. And it tends to be quite iterative like that, in that you prove those milestones, those hurdles, to access more funding and greater levels of funding if the business does need it. Mm-hmm. So that tends to be the approach. And it's about finding that best fit for your plan. So if management teams want to do something like that, pull that together, work with the likes of yourself, work with the accountants and the advisors to figure out, well, actually, which investors should I be speaking to go and do this? And there is a fit thing there with what your plan is, because investors do have criteria and it's all very different.
And then do you look at like a 3-5 year like investment horizon to then exit at certain point? Do you kind of, lay your cards out at the start?
I'd say that was typical in the industry, that type of time frame, but we're quite lucky in that our fund is a venture capital trust and it's evergreen. So we can actually be as patient as an investor as we need to be, for better or for worse, as a phrase I like to say on that. But we can wait to make the best return for our clients and for the other shareholders that are in the assets we invest in. So we're quite lucky in that regard. But average hold periods in venture capital are probably 7 to 10 years.
Okay.
In private equity, and I can give the distinction between the two sets of terminology, their hold period is probably more that 3 to 5 year window.
Yeah.